Hey folks, welcome to the October 2023 Boom Bust Invest House Price Update. Part 1, we covered off the UK economy headline figures, so that's our leading indicator for house prices. Where the economy goes, the house prices go, so link in the description to that if you want to catch up with that. Part 2, we'll just take a quick look at the main house price indexes. You can get these links here on the boombustinvest.com website /house prices, or just click on the house prices link on the home page. So heading over to housepricecrash.co.uk, so we've got the main indexes here, and we'll just go through these and just take a quick look, see where we are in October 2023 as we stand. The latest figures we have are September 2023 currently, but these are the latest figures on housepricecrash.co.uk. So starting from the top, so this is one of the main indexes. It's not necessarily a government related or to do with the lenders, but it's a sort of academic statistical analysis. It's fairly well known. So they're saying that's 1.3% lower than a year ago, for August 2023 data, and 2% down, or 0.2% down for the month. In terms of the main lenders, Halifax and Nationwide, so these are the big ones. These are probably the most widely watched ones. So Halifax is annually year on year down 4.6%, and Nationwide is down 5.3%. Quite a big monthly drop. So this is August 2023 for Halifax, 1.9% on the month, and then for Nationwide just flat. But yeah, so we'll take a look at Nationwide. We'll see the trend there is definitely going steadily down. The two government ones here, the ONS and the Land Registry. So the Land Registry is more of a sort of lagging indicator here, really. So it's July 2023. I think the ONS is slightly more up to date, or at least applies some different statistics and statistical analysis. So overlaying that sort of registry data, I believe. So again, sort of just keeping its head above water at 0.6 year on year, and 0.5% down for the month of July. Zoopla. So the asking price index is Zoopla and Rightmove. Zoopla is, so they're both year on year negative, 0.2% for Zoopla and Rightmove 0.4%, and these are probably also, as I understand, quite heavily sort of cherry picked and biased, so it's probably down a lot more than this in all likelihood. And that's 0.5 for the month. Rightmove is up 0.4. Obviously things just don't go up and down in a straight line. So these are the headline figures. As you can see, I mean, it wasn't that long ago. These were all green arrows pointing up, or blue arrows pointing up, and they just steadily, just watch them over the months, steadily change to red. And in all likelihood, they will probably all be red in a few months' time if things keep going the way they are. So let's just take a quick look at some of these then. So we can see this is the Land Registry data going back quite a long time, 2002, and you can see the pattern changing here. Doesn't look like much. I mean, it's still sort of relatively high, but the likelihood is this is going to come down. This is lagging data, so this is only going back to July, and so we should see that continue down. And the annual house price change year on year, again, this is like the lagging Land Registry data, but you can see the trend, this steep decline here heading towards zero. The only other time we saw this sort of an angle was here at the Great Financial Crisis, just before Great Financial Crisis 2008, and it's pretty similar. So it looks like that momentum is probably going to continue down, break through zero, and just keep going. So on the, so we have to wait and see. But the percentage change by property type, then, so you can see it's the same going back to the great financial crisis. All of the property types, flats, terrace, semis, detached, are all going down in unison, and we can see the same thing here at the moment. You can just about see flats there have gone into the negative. The other types of property are just catching up with flats. So then the nationwide monthly house prices, again we can see that this is going back to August 1991. See the great financial crisis here, and we can see this change here over that longer term. So again, that hasn't really been seen, that sort of pattern, and it doesn't look like a lot, but it hasn't been seen since the great financial crisis really. And so it's following a similar pattern there already. So this is September 23, it's a bit newer. And then on the shorter time frame here, you see it going from 272 September 22, which is like the height, the peak, and then it started to sort of come back and go back up here around summer of 2023, but then it's come back down to around about 258,000. You can see that here in the table as well. So you see a steady decline this year, starting at about 1% and then about 3% in the summer. So now about just over 5% in the autumn. So it's just a steady decline is what we're seeing now, a change of trend. And finally then, for anyone that says house prices always go up or thinks house prices always go up, in terms of inflation, in terms of your spending power, they don't. In short, we can see currently, I know we've had an inflation spike, but we can see currently here that the inflation adjusted prices kind of similar to what they were in 2002, 2003. So, and that kind of, again, another sort of steep decline here is kind of what we saw in the Great Financial Crisis. And so it's following that same pattern. Again, in the sort of late 80s, early 90s crash as well, we saw a similar sort of steep decline here, and you can see here, and here it's following the same kind of angle and the same kind of pattern. So we might expect that to simply continue if we're heading in for a recession in 2024, which is widely talked about. Then if this is the bottom here in 2013, was even lower than 2008, but we seem to be, so we're lower than 2008 in the financial crisis currently at the moment, and it looks like we're going to sort of go lower than this bottom here in like 2012. This is kind of around about the European sovereign debt crisis, and so that's where we are. We're seeing, to summarize, we're seeing declines in all of these indexes, and there's no sign and no narrative to tell us, to suggest to us that that's going to change. So thanks for listening, and I'll see you in the next monthly update for November.